Hello, I'm Paul Waberski from Brown&Co Agricultural Business Consultancy Department, and I'm joined today by one of my land agency colleagues, Kate Barlow, from our Sydney office. Kate is a land agent, but also a farmer. Kate, there's been a lot of talk about the changes or the imminent changes to inheritance tax law. In summary, what has changed from where we were before for many years?
So the current position for agricultural property relief and business property relief is that a working farm would receive 100% tax relief on all agricultural property and business property. As of April 2026, this will be changed where there is a threshold of £1 million for the combined value of agricultural property and business property relief, and anything over that threshold will now be taxed at a 50%, which is basically an effective 20% tax rate of anything over the £1 million threshold.
Wow, so that's quite a major change. Think about what's happened to land values in the last few years, machinery values, properties. That's not really a big farm or a big unit where suddenly that threshold is surpassed. We're into a tax challenge where we're going to have to find some money from somewhere, and not a big threshold, £1 million nowadays. And of course, farm profitability is really where the challenge is paying that bill. You mentioned APR and BPR. What do those mean? And from a practical farming point of view, what assets are those?
So they are agricultural property relief and business property relief. Agricultural property relief is any property such as farmland, so that can be arable and pasture land, and then that will also include the farmhouse, any farm buildings, any farm cottages. And then business property relief is anything used within a business that isn't agricultural property, so things such as your machinery, any livestock, any sort of smaller diversification enterprises such as holiday lets and farm shops.
Wow, so suddenly we're finding a very different regulation coming where all the assets on the farm have to be included. Where does one really start, Kate? What do you suggest as a starting point for a farming family?
Starting point I would suggest is to get an idea of the value of your assets. So speaking to someone from Brown&Co to give you an idea of the potential value of your land, your property, and then also an idea of your business property assets as well.
And I suppose what's really important is there's such a variation with location and geography, because land in one part of the country can be worth so much different to elsewhere in the country. And I think it's worth mentioning that Brown&Co probably has the biggest team of land agents and agricultural consultants under one roof. So we have that local knowledge, but also we have the resources to deliver that advice and support. So once we've got an idea, how important or who else should we engage in this discussion and planning?
Other professionals to speak with about the changes to the potential tax are accountants and solicitors. I recommend early engagement with both, speaking to your accountant to see what the structure of your business is, and then speaking with your solicitor to see how, if there are any changes that can be made to mitigate any tax implications.
Yeah, and again, once a strategy is derived between the professionals, including us and them, we've got the ability to help implement that. Kate, April 2026 is not far away. So what is the first step, do you think? If there's one thing farmers need to do after seeing this, what's the first step they need to do?
I would recommend the next steps to be registering with your local Brown&Co office for the forthcoming autumn webinar. I would then speak with a member of your local office, either the land agency or agricultural business consultancy team, who'll be pleased to discuss your situation and help you try and move forward in this challenging time.
Thank you.